121% in the past 6 months. This rise is significant, especially compared to the 13% rise in the industry. Given the remarkable upsurge, you may wonder if the current level still offers a buying opportunity for SoFi. Well, let's find out, because SoFi Technologies just got their price target raised by Goldman Sachs. Don't worry.
Short answer, no. Short answer, no. You don't have a buying opportunity in SoFi. In fact, I would venture to say this is a selling opportunity. We got a sell signal in OVTLYR on January 28th. And like right now, what I see is that SoFi has double overhead resistance right here. That is going to be a very difficult hurdle to try and get over. You've got price under the 10 moving average. The 10 moving average can be considered your short-term moving average. The 10, 20, 50 is still pointing north, but this double overhead resistance right here, these order blocks are large institutional orders waiting to be filled, right? The first time since 2021 that price came up into this area, it got hammered back down and it created a second order block. There are a ton of orders right here ready to sell as soon as price comes into here. So you can take that risk if you want to, but me, I would avoid SoFi at all costs. And if I were a SoFi shareholder, I would say, you know what, maybe I'll sit on the sidelines for this. Maybe I'll sit on the sidelines. But let me introduce myself real quick. My name is Christopher Uhl. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. And I've been successfully trading since 2009. This is where you save time, make money, and start doing with less risk together as a team. Now let's get back into today's video. And don't forget to stick around to see how we rank this out of 10 and subscribe if you haven't already.
Worry about subscribing, tapping the like button, or looking for the coaching and Discord link. We're going to jump into SoFi after earnings right now. Before we jump into SoFi, my free link to learn more in the 1 hour you spend with me than anywhere else. That's what every student that's ever answered your questions.
I disagree. I think watching this channel, you're going to get way more information than watching Corey.
The Federal Reserve's recent rate cuts have significantly boosted SoFi by alleviating pressure on its lending business. Lower interest rates, reduce borrowing costs, encouraging more customers to take loans and refinance existing ones.
Well, maybe, but when the Fed reduces rates, that's actually bad for financial institutions, right? Because the spread that they get to make gets compressed. Let me explain this, right? So when you deposit, let's say you deposit $100,000 into a bank account, right? They're going to pay you probably 5 basis points. If you're lucky, 50 basis points, right? So their cost of funds on that 100,000 is 50 basis points. So that's, what is that, like $50? It's basically nothing. Then they will lend out that 100,000 and make a huge spread on it, right? They are going to lend it out for, you know, I mean, by one F-250 at this point, right? But, you know, partial on a house, and they'll, you know, collectively pool those together to make out other loans, right? But those loans had been at higher rates. And if we do have rate cuts, let's say that, let's say their lending rate is 7%, and maybe they tag it to, you know, whatever yield curve you want to tag it to. But in this case, we're going to say that they tag it to the Fed funds. Let's say that they tag their pricing to Fed funds plus 3%, something like that. And let's say that their rate that they are willing to lend at is, let's call it 6%. If there is a 50 basis point rate cut, that means that they are now going to lend at a lower rate, which means their spread, which was at 50 basis points up to 650, so a 550 spread, is now compressed from 50 basis points to 550, so a 5-point spread, right? So a 50 basis point spread cuts into their margin. So it's not necessarily true that cutting rates will stimulate people to take loans. That's the economic theory behind it. But if we're looking at bank earnings, right, that is equivalent to the Fed basically making a mandate that everything you charge as a business owner is going to cost less. That's exactly what that equivalency is.
This improves SoFi's loan origination volumes and enhances its overall profit.
It can improve origination volumes, right? That's the objective here. When the Fed lowers rates, when the Fed cuts rates, that should, in theory, go out into the marketplace and excite people to go out and buy more. For another example, right? If I needed to buy a home and I could only get a 7% mortgage, you know, my monthly payment's going to be huge. But if I wait and rates come down, my mortgage payment may be $500, $1,000 less just based on the interest rate that I'm going to pay. So I'm going to be more interested in buying homes at that point. So there could be more originations that pop up. We'll just have to see about that. But like I say, that bank actually makes less money because of their spread on the cost of funds versus the cost that they're paying out. I'm sorry, the cost of funds versus the cost of lending.
Profitability. Additionally, the reduced cost of capital supports SoFi's ability to expand its lending capabilities while maintaining competitive interest rates. These rate cuts are particularly beneficial in a challenging macro. This improves SoFi.
Hold on, let's listen to that again. I feel like he's contradicting himself. I just want to make sure I heard it right.
Loan origination volumes and enhances its overall profitability. Additionally, the reduced cost of capital supports SoFi's ability.
Reduced cost of capital. So the capital that he's talking about is what they have to pay out. So if they're going out and borrowing money, right, that would help them. And that's a very, very common thing to do, right? If you're an institution and you don't have enough deposits, you can go out and borrow, 10, 50, $100 million in order to make more loans, because what you're going to pay on that borrowing is somewhat like a deposit, but you're going to pay more, but you're still going to be able to keep the spread in what you're paying on that borrowing versus what you're lending it out at. So maybe
to expand its lending capabilities while maintaining competitive interest rates. These rate cuts are particularly beneficial in a challenging macroeconomic environment where borrowers seek affordability, giving SoFi an edge in growing its customer base and improving its financial performance. This rate cut extended a trend of reductions through 2024, which is expected to continue into 2025. SoFi student.
Maybe. I think, actually, let's go look at the CME Fed Watch tool. If we look at the CME Fed Watch tool, it'll actually give us a prediction on where that was going to go, right? So current target rate is between 4.25 and 4.50, and it's the next meeting is in March. So there's an 82% chance that they will not decrease rates by March. Let's go out to the end of the year, and there's only a 10% chance that they will not lower rates. There's a 90% chance that they're going to lower it at some point. But it may take a while to get there.
Student loan refinance business stands due to less generous loan forgiveness policies under the Trump administration. Stricter forgiveness criteria may prompt borrowers to seek refinancing options to lower repayment costs, creating opportunities for SoFi to expand its customer base. By offering competitive rates and flexible terms, SoFi is well positioned to attract borrowers seeking relief.
Is this an ad for SoFi? Like, this sounds like SoFi paid him to read this.
From higher repayment burdens. This shift in policy could revive demand for private refinancing, which has slowed under broader forgiveness programs. As a result, SoFi's refinance segment could experience increased growth, contributing to its overall revenue and strengthening its position in the market. Don't forget, Anthony Noto said that it's not a matter of if, it's a matter of when SoFi becomes one of the biggest banks in the United States. Overall, continuous digitalization across all industries, particularly in the financial sector, presents a significant opportunity for SoFi. As a company focusing on an online banking and offering a comprehensive suite of products and services, SoFi is well positioned.
This sounds like he's reading it directly from a press release.
To benefit from this trend, the demand for online financial platforms is expected to rise, and SoFi's technology platform, Galileo, is an integral to its banking business and is being adopted by other financial firms. This expansion positions SoFi to capture more market share from traditional banks. Conventional banking giants like JP Morgan, Bank of America, and Wells Fargo are more mature and experiencing slower growth. SoFi has very strong fundamentals.
Well, yeah, because they're like multi-trillions of dollars. Of course, they're experiencing slower growth. Like, do you really think that a startup, or however many years old this is going to not have a significantly faster growth curve than something with, multi-trillions of dollars in assets? Of course they are.
In the fourth quarter of 2024, the company achieved a 19% year-over-year increase in net sales. The highlight was a gain in profitability, with SoFi achieving a gigantic 594% year-over-year increase in net income. This profitability improvement reflects SoFi's strong operating leverage as its larger scale supports a more efficient cost structure. Scalability remains critical to its success, with management focusing on aggressive growth in key metrics. Adding 785,000 new members during the quarter, the highest in absolute terms, strengthens SoFi's ability ability to continue to drive cross-selling opportunities and lower customer acquisition costs, enhancing long-term profitability. All three business segments contributed to revenue growth in the fourth quarter. Lending and technology platform revenues grew respectively 18% and 6% year over year, while the financial services segment soared with an impressive 84% increase. The consensus estimate for SoFi's 2025 earnings is pegged at 28 cents, indicating a substantial growth of 86.7% from the previous year. In the past 60 days, there were 2 upward revisions in earnings estimates for 2025, with 1 downward revision. Let's not forget that SoFi beat the EPS earnings estimate this past Monday by over 700% from 4.
Okay. And this is grinding my gears a little bit, actually, because I mean, he's clearly reading some sort of press release. I mean, what value are you bringing by reading this press release? Let's go look at this, right? So to the point he just made, they just beat, whatever that. Let's listen to him again.
Let's not forget that SoFi beat the EPS earnings estimate this past Monday by over 700%.
Okay, so it looks like they blew out earnings per share estimates by 700%. And the stock got murdered, right? If we go close to close, the stock was down 10%, at one point down 15-ish%, right? In fact, from the high the previous day to the low, 17%, right? And that's why I say it doesn't matter. It doesn't matter at all what the earnings are, what the fundamentals are, right? Price is the only thing that pays. And you can go back, you can look at my YouTube community feed, and you can see the posts that I said, watch, I was cautiously bullish on SoFi. You can go back to the videos that I gave all this breakdown on. That was cautiously bullish because it did figure out this little bearish trend and start trending back up, leading into earnings, which is a play I love to make, trading up into earnings. But this is why I don't trade at earnings right here, because they blew out their earnings numbers and the stock got crushed. The stock got monkey hammered is the technical analysis term for it, right? It got the monkey hammer back down. And looking at this now, it's like, well, we did have that overhead resistance that Chris was talking about, and it got monkey hammered. And now we're looking at it, and there's 2 overhead order blocks right in its way. So it can have the greatest fundamentals. It can have the greatest story of all time. But a story is only going to get you so far. All that matters is the price going up. And I still keep pulling out this market cycle investing guide here because it just overlays so well with SoFi. Let me show you what I mean. And SoFi, I mean, there's whole channels on YouTube dedicated just to SoFi, right? And that didn't quite work out like I wanted. But this absolutely looks, how similar does this look, right? You've got the right hand, hope, optimism, belief, thrill, euphoria as it's going up, 170% or whatever it was. Like, people got so stoked about it. And so now they think this is the one stock to take over the world. And then it's got that pullback here. And now we might be getting into the other side of the curve, which is complacency, anxiety, denial, and panic. I'm not saying it's going to crash, right? I'm not saying that this is where it's going. But what I'm saying is, like, the irrational exuberance is some point going to get paid. This was a buy the rumor, sell the news situation. If you were buying it up into here, you got played, right? You got played because you probably were so stoked about this all the way up, and then only to see it get absolutely destroyed when it hit that order block up here. That, I was warning people for weeks, watch out for this order block. Don't get so excited. These orders want to be filled. And when they get filled, they're going to push price back down. So I think that's what's going to happen next. Like I say, we've still got that sell signal and outlier. And you can see the greed was getting so strong with SoFi, peaked right at earnings. And now the greed's waning and the fear is coming back in. And I want you to also compare right here. This is the all the financial sector, right? It was getting more and more greedy and continues to get more and more greedy in the financial sector, where SoFi as a stock is actually getting more and more fearful, right? Do you see the differences there? Do you see that that discrepancy there? That is not what you want to see. That breakdown there. You want to see them both moving together. So for me, SoFi is a pass, a hard pass. I wouldn't invest with it. I would not invest in this with your money.
from 4 cents to 29 cents in 1 quarter, and they beat revenue by almost 10%. Right now is the time to get into SoFi because it is dipped down into the $15 range.
I disagree completely, very vehemently so. I would wait if I were investing in this. Long-term, short-term, doesn't matter. If I were looking to get into this, I would wait until it goes over 1850. Now, I know you're probably thinking, what are you talking about? Buying it over 1850? There was one stock yesterday in our live stream. I was just taking, Nike. I was taking requests, and I was like, look, Nike's a perfect example of a stock that was getting beat up, and somebody was probably saying, at 82, it was a great deal. At 80, it was a great deal. At 78, it's a great deal, right? All the way down, somebody's saying it's a great deal. But if you had waited until it had hit, let's say, 76 on the way down, right? You're losing money hand over fist, right? You're losing money all the way from hundreds of dollars a share, 115 bucks a share at least, and waiting until it finds its bottom and is starting to come back up. Those moving averages with the outlier trend template, the 10, 20, 50 have crossed back up. This is a much better buy. This, yes, you're paying more for it, but you're paying more for it as it's improving in price. And only price pays, right? Fundamentals be damned. Only price pays. You can see it going down, and maybe you said 76 is a great price, and then you got wrecked all the way down to 71, 70. You're probably questioning everything. Your wife is like making you sleep on the couch if she hasn't kicked you out already. Or you could still buy it at 76 on the way up rather than all the way down. I really want you to start considering buying strength, because strength is price showing you which direction it wants to go. In fact, we can do this example again on SoFi, right? You probably loved SoFi when it was early in 2024 and it had dipped from, let's say, 10 bucks down to 750. You're like, oh my gosh, what a great deal. I should buy it now, right? And then it keeps on dipping, keeps on going down to 660, keeps on going, down to 616, keeps on going, hits a low of 602. And you're probably thinking, oh my gosh, what have I done, right? But if you loved it at 750 here, let's do that 750 on this side. Or 750. Let's say you bought it at 750 over here, right? You were on the struggle bus for months. This is from March until it really started to peak back up in September. So you wasted 6 months. 6 months. Yeah, of course, you could have bought it here and sold it back out. And that happens, right? A little bit of chop here and there. But you could have waited 6 months, invested in something else, and been making money in the meantime. And then when it finally does turn, because only price pays, when it did turn here at that same 750 level, right? Let's move it 750. At that same 750 level, buy it back in as it crosses on those moving averages. Boom, watch it go. So I really need you to start understanding that catching a falling knife, whether it's Nike, SoFi, AMD, whatever, is a brutal path to make money. If you ever do make money, right? I'm sure people who bought AMD all the way down at some point are saying, please let it go back up. And you could still buy it at 120 after it's figured out where its bottom is and is starting to come back up, just like Nike did right there. Perfect example of how this game is actually played. The game is not played buying things that are falling. Now, SoFi, like I say, is not falling exactly. It's struggling right now, well under this double order block right here. I mean, I disagree completely with what Corey's saying here. Now is not the time to get into SoFi. Let it figure out what it's going to do, because right now the sideways trend is going to chop up a lot of people.
And if it goes any lower, it's a time to dollar cost average and add more to your position. SoFi
dollar cost average is the fool's way of saying losers, average, losers. Paul Tudor Jones, one of the greatest traders of all time, he even struggled with this. And there's a great picture of him. Hang on. There's a great picture of him, one of the greatest traders of all time, that says losers, average, losers. If you're justifying that you're dollar cost averaging into something, this is you, right? Even one of the greatest traders ever had to have that on the wall to say losers, average, losers. Adding to a losing trade does not mean that it's becoming a winning trade. Adding to a losing trade just digs you deeper and deeper and deeper into the hole. And with AMD, let's do that one. I like to use AMD because this has been in such an obvious downtrend, and so many people are calling and saying, you have to buy it, you have to buy it. But those same people were saying buy it at 160, 150, 140, 130, 120, all the way down. Right? And yeah, of course, your average price is going to be lower, but imagine it goes even lower. Imagine it goes down to 80. Are you still stoked that your average price is 160, 150, 140, right? Let's say your average price is 130 because you've been picking up shares all the way down and it hangs out at 80. And, you know, maybe that settles into its new normal and it takes 3 years before it ever comes back up. Or you let it find its bottom and then start averaging up into it. And you can still get to that 130 average price, but you're winning all the way up instead of losing all the way down. Dollar cost averaging is a very poor thing to do.
Crushed earnings, and it was remarkable what they have done thus far, and there's plenty of room for growth going forward. In fact, the price target with some analysts by the end of 2025 is $25 to $30. Even if SoFi only hits $25, this would indicate a 70 to 80% return in less than a year. This is crazy amount of money and profits in one stock. SoFi has already delivered over 200% in the last 6 to 8 months. So
again, and this is the fallacy that people are falling into. Where's that go? This is the fallacy that people are falling into. It's already delivered 200%. The thrill, euphoria, belief behind it. This is where I get really concerned. When I see whole channels devoted to the whole YouTube channels with nothing else to talk about except SoFi, that concerns me so much.
This would be even more for anyone who's been holding onto the stock over the past 6 to 8 months already. We're going to take a look at a chart. I'm going to show you guys exactly where I showed you SoFi was likely to go after earnings. We're going to look at some technicals and fundamentals yet again.
So did you likely say that was going to drop 17% after earnings? I doubt that. I doubt that highly. But I absolutely, if you followed this channel, you can go back and watch the SoFi videos. I absolutely said, watch out for this overhead resistance right here with this order block. And that's exactly what happened.
And exactly what I would do to get into SoFi. But if these technicals, fundamentals, and all of these things are confusing in the news, and maybe you're lost in trading, you're new, you don't know where to begin.
Honestly, it's chart.
It's to
Resistance and no longer support. So right about where I bounce around in a bear, look forward to SoFi would drop down to this. I showed you guys in the previous SoFi video right before earnings. In a bearish scenario, SoFi would drop down to this line right here, and it would bounce around. And it's right there, bouncing and resisting on that line. Earnings was right above this line, and now it's below the line as a ceiling or a resistance and no longer support. So right about where I thought it would be, I thought the price target would be about 16.24 on average. We're at 15.99 and has bounced up several times, touching the 16, 20, and 30 range and coming back down. Now, this dip was not really because of earnings. This was because of DeepSeek and the overall market going down, and the mere fact.
No. Don't try and push this contagion theory, right? It's not real. This sell-off that happened was concentrated in tech shares. Now, I don't have the map, but I should have taken a screenshot on that day. It was concentrated in just tech shares, right? You had your Broadcoms, your Nvidias, your things like that. They got wiped out. They got absolutely monkey hammered on that day. Financials didn't. Financials are getting stronger. In fact, one that I recently traded was HSBC. I got out way too early, unfortunately. I mean, look at this. Look at HSBC, right? And then look at SoFi, right? It's struggling. It's struggling hard. So don't tell me that contagion only went to one stock, only went to HSBC, only went to SoFi. No way.
Fact that people were fearful and got out of SoFi. The earnings was incredible. They beat the estimates on EPS from 4 cents to 29 cents, and they beat the revenue by 64.49 million, 9.56%, which is really good. The guidance was also good.
Again, fundamentals don't matter. All that matters is price, because only price pays. So let's do this. Let's rank this video. Let's rank this video here. How would you rank it? Drop it in the chat where you would rank it. First, he spent 80% of the video talking about like it just reading a press release, right? That's nobody's learning anything from that press release. It's just advertising. So, and then saying, now's the time to get into SoFi, right as it's like really struggling. No. I'm not saying SoFi is going to crash, but what I'm saying is SoFi is not looking ultra bullish to me at all. It's either 3 or 4 to me. I'm going to say 3.5. I'm somewhere between frustrated and mediocre with this one. But tell me what you would know and or what you think of this video. And of course, tell me what you're trading in the chat. And come back tomorrow to help, where we will help you save time, make money, and start winning with less risk together as a team. YouTube is going to recommend a couple of videos right now. I recommend you watch one of them and have a fantastic day. We'll talk soon.